Monday. I hope you guys are having a great day. Welcome to this edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are going to take a look at the markets from an educational perspective, identifying breakouts, reversals, and all that fun jazz. Let's go ahead and dive in. Starting first with the S&P, we're down about 45 points this morning, but that's not a bad thing. Not a bad thing. Question we have to ask ourselves is, where do we think it's going to stop going down if this bull market's going to continue? Now, last night was a brilliant setup for a gap and go play. Now, what is a gap and go? A gap and go is when we gap in the direction of the predominant trend and we gap outside of the prior day's range. And so that set up a trade to get short below the first candle's low with a stop above the first candle's high. And it did give us, gave you a little scare, but this is why it's important to allow your trades to work out and hit their plan. As you got an entry here, and then 1, 2, 3, 4, 5, 6 candles later, price then started to make a move. We really moved on the European market open, and it came down and hit our 2-to-1 target. That was both the S&P as well as the NASDAQ, both markets reaching their target and hitting their level for a pretty good move. So if you were joining us in the live trade room, hopefully we're able to catch some of that. Let's say you missed some of that. So now where's the reversal? Where's the area where I can get short if it comes back up? Now, where I would look to get short right now would be this little wick over wick area here, 4203 by 4213. Those are going to be kind of my ideal levels. That's a really good time of the day the level was formed. I'm going to set an alert there to get short when price gets above this area, just so that I am ready to go. If we do get a bit of a rally up this morning, that's where I'm going to look to see if I can get short. Now, why am I getting short? Well, because my 4-hour trend is down. But like I said earlier, that's not necessarily a bad thing. Matter of fact, that means that my candlestick looks like this, coming on a bit of a pullback. But that pullback, a lot of people are trend line drawers, right? And so if you're a trend line drawer and you're connecting those 3 lines, you might say, well, our uptrend is broken. Or maybe you say, well, maybe let's connect those lines now. This is why I don't really lean on trend lines a whole bunch. What I want to focus on are swing highs and swing lows. And when I look at my swing highs and swing lows, the tool that I like to use for that is the zigzag indicator. And looking here at my zigzag indicator, what it does is it very clearly spills out my swing highs and my swing lows. And so when I know where my swing highs and swing lows are, I know that we're just in a pullback in what was a bigger picture upward trend, because I have higher swing highs and higher swing lows. Now, if I get a lower swing low and a lower swing high, then my trend would change. But as it stands right now, this is actually a good thing, this move back, and it's the best thing for a strong bullish market, because if we can get a little pullback on a weekly chart, and the weekly chart shows me a higher low and then a higher high, then I think that we're going to continue to propel much higher, and we'll probably go up to new all-time highs. And so that's what I'm looking for, is a higher low followed by a higher high in the NASDAQ, in the S&P as well as the NASDAQ, for price to continue to propel higher. But I'm using that, so I want that in the weekly chart for longer term investing. So I look for it on the daily chart. The daily chart's what's going to tell me if my trend is over on that larger time frame. It's going to give me a little bit more of a warning, a little bit more of an early indication. Okay. As far as the NASDAQ goes, similar thing to the S&P. Now the NASDAQ has come into a really nice area of demand. This area of demand, I'm okay if you want to get long at this demand area and play it for a little bounce up out of that zone. If you do, it's got to be a confirmation entry. But at this point, I'm going to remove it, and I'm going to then wrap my 2 lines around this wick over wick level that exists up here, and that would be our next available turning point for price to continue to trade with the big picture downtrend. Remember, when I'm day trading, my big picture is the 4-hour, right? When I'm looking for short-term income, my big picture is going to be that 4-hour chart. When I'm investing or swing trading, it's going to be weekly or daily charts. So different time frame charts are going to make different determinations on what my actions I'm going to want to take. Looking over at my energies and metals, crude oil, And I've been looking at the V22. That's been the one that I've been paying the most attention to. I've got a couple of 15-minute levels on here that while this bounced into the 15-minute level and made a really nice move away, one of the things that I talked about in last night's live trade room is that I wouldn't have taken this trade. Now, I was asleep when it got there anyway, but the reason I'm not taking this trade is because I don't really trust 15-minute levels when the 4-hour chart is choppy. When I've got a choppy 4-hour chart, I don't really trust 15-minute levels. So while we did get a good bounce off this area, frankly, I would have been out of it before then because, it hit the level 1, 2, 3, 4, 5, 6. Even had I been awake, I'd have been out of this trade before price, really made this big move up. Now that we've made that big move up, you've got a few other areas that have been created, but I don't know that I necessarily trust those either. So on the hourly chart, I do now have this wick over wick that I feel a bit better about because it's an hourly level above a pivot low. And so I'm okay with that zone right in there. Remember, I'm looking at the V22. That's the contract that I've been trading. It doesn't have all of the volume shift over as of yet. But I was looking more of a swing trade below 85.35. If you just want to trade the front contract, let me get rid of some of these other older lines because I haven't drawn on this one in a couple of days. If you want to trade this front contract, then your price is going to be 89.25 down here to 88.84. Okay? And then gold last night did hit our breakdown, so our breakdown trade from our live trade room was pretty effective, and that has continued to run down. It's still dropping. If you missed the breakdown but you still want to get involved in this thing, this is where I might go to a 15-minute chart. If you missed the breakdown, still want to get involved, if we do rally up, you got a good entry right here. I don't know that we're going to get a rally up. That's not been gold's MO the last few weeks, is rallying up into supply. It's just been continuing to drop. And so if we don't rally up and you still want to take advantage of that, look for a short kind of below this level right in here. The last one that I'll speak to this morning is the euro, as the euro is coming close to parity again, right? And if you remember, we bounced hard off parity earlier this year. I say hard. We hit it and bounced off of it. It's an automated level. There had to be computerized trades there that were triggered. The question I have is, will we see more of that? And normally I would look at this for a breakdown trade if it wasn't for the fact that I know that I have this area right here where there could be some automated levels. Now, if that causes us to bounce back up into a supply area, then I would look for a potential shorting opportunity. So those are kind of my levels for today. If you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Hopefully you pick something up, learn something new today. But I'd love to see more of you. So join us back tomorrow, or maybe join our live trade room. Go to TradersArmy.com. Take a look at becoming a member and what that looks like. It may just be the best decision that you make in your trades. All right, buddy. Talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to TradersArmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.